Let's revisit the cross-currency pair CAD-Swiss now. Now, I know we traded this about 3 to 4 weeks ago, and we were out at either break-even or at a small profit, depending on how you traded it. But we have actually got another opportunity to sell this, and this has come in the form of a lower high, thanks to the close of last week's bearish pin bar reversal. As you can see here, and we anticipated it happening as well, we've got a medium-term reversal here on the weekly time frame. And okay, if people look at double top formations as reversals, and indeed they are reversals, then we can anticipate this being the neckline and this being the acceleration point of the lower high. So whilst we had that first test about 4 weeks ago, manifesting itself as a bearish pin bar reversal, which gave us a sell trade over Christmas time, we had the fall and the thrust up amounting to this lower high. It didn't quite exceed the previous high, which is significant because it tells us that the bears did not allow the bulls to get thus far. And as we all know, or hopefully know, bearish pin bar reversals are a very good sign that the market is going to fall the next day or the next week. And the fact that it's a lower high in combination with this bearish pin bar reversal is a positive clue. So if we are aligning ourselves inside this reversal pattern here by simply placing our order just below the previous low, stop loss above the high, then you could be aligning ourselves for a decent trade with high profit potential where we're inside the reversal pattern before it's even confirmed as a reversal pattern. You see, a lot of rookie traders who've read a few books on price action, they'll be trading this reversal pattern by simply placing their order just below this point here, the neckline, with their stop loss all the way up here, which is horrendous reward to risk, because if as and when price moves all the way down here, you've barely got a 1.5 to 1, which is not enough. But if we're able to get inside the explosion before it happens, or as I call it, the bullet inside the gun, before it's confirmed as a reversal pattern, then we've got far better reward to risk by simply having our entry here at the break of last week's low with our stop loss above last week's high. We're already up, if we're risking 2%, we're already up about 4.5% by the time it even gets to the break of the neckline here. So let's just do a rough calculation here. So if we're risking 2%, which is how much we risk to be diligent, we've got potentially 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14%, risking 2%. If we enter here, stop loss above the high, and the target is the previous low here. One thing I do want to bring to our attention is the fact that we've got, from a fundamental standpoint, in Switzerland, they've got negative interest rates. So it's minus 0.75, whereas in Canada, it's 0.5%. So if we're selling the Canadian dollar and we're essentially going long on the currency with negative interest rate, then we have negative carry, which means that if we're trading with the cash daily rolling, that means that we will be rated a small amount every night by the broker. So the way to circumvent that is by having a futures contract. Whatever futures contract you choose is entirely up to you, but with the futures contract, the great thing is with futures contracts is the fact that we only pay the spread once, and okay, it's a slightly bigger spread than cash daily rolling, granted, but you'll ultimately pay far less in broker fees as a result of this negative carry than you would if you're paying a slightly increased spread as a one-off with the futures contract. So that's something to bear in mind, all right? Let's have a look to see if we've got any other clues. Do we have a reversal on the smaller time frame? Not that it matters. We've got decent evidence already to suggest that we are potentially going to be doing quite well off this one. Okay, well, we've got, if for example it takes out last week's low, we could see this as a head and shoulders formation with the left hand shoulder, the head, and the right hand shoulder. But that's the beauty of it. This reversal pattern hasn't quite formed yet, but if it does take out the low of last week, then we can retrospectively see this as a head and shoulders formation. Okay, it's quite messy, and you can see it slightly more acutely on the line chart here, which is something I recommend if you want a bit more clarity. But what is interesting, and I do want to emphasize this, is that, okay, if you don't see a reversal pattern on the hourly or the 4 hourly at the time of your setup bar, you need to ask yourself, well, if I enter this trade anyway, will price likely have formed or confirmed a reversal pattern by the time it's got down to my entry and triggered me into the market? So that's something to bear in mind. All right, so that concludes CAD Swiss.